Next up, would like to welcome Mr. Matt Manson to the stage, who is CEO and President of Radisson Resources with their O'Brien mine within the Abitibi.
How you doing?
Thank you. Alrighty, let's get started. So Matt, thank you for taking the stage and sitting down with me for the fireside. We've got around 15 minutes. I'd like to talk through the asset, your background, and what kind of excites you most over the next 12 months. So we'll kind of unpack those different aspects. But first up, you've now just kind of been in the seat for over a year, having started, call it last June or so in 2024. Outside of obviously, and we kind of spoke about this yesterday when we had our one-on-one, the kind of jewelry box specimen pieces that we've seen from prior production at O'Brien back in the 20s to 30s. What was it that kind of attracted you to the project, to O'Brien within Quebec?
Yeah, so I'm coming from a mine development background. So I've done sort of 3 in my career. I was a lieutenant junior person at Aber when Diavik was built with Rio Tinto. I was then CEO when we built the Renard Diamond Mine, CEO of Stornoway, the diamond mine in Quebec. I was CEO of Marathon as we were developing the Valentine project that Calibre acquired and now Equinox. So for me, and also for everybody else involved in Radisson right now, Pierre Baudouin, and many people will know as the chairperson, Peter McPhail, who was my chairperson at Marathon, ex-Alamos, he's on the board, Michael Gentile is involved, big investor. You know, we see a mine here, right? There's got to be a mining project and a path to its development. We're not interested in drilling the thing for the next 10 years, right? So that's most important, that's first and foremost. O'Brien is the asset. Ran as a producing gold mine between the 20s and 50s. Famous, as you said, for these museum quality samples of gold that are in museums, and the Royal Ontario Museum has a big collection of them. You can search their online database and see it all. We're actually trying to open people's eyes to what O'Brien is, because the drilling is telling us it's a bigger system. Sometimes when you accentuate the grade of a deposit, you're implying that it's bespoke and small in scale. That's not what O'Brien is. We see upwards of 4 million ounces here, with the mineralizing system established at shallow depths, continuing down to a sensible floor for exploration. So that's sizable, right? And we think it's a mine right now, based on what we have, which is about 1 million ounces, and we see it getting bigger.
Fantastic. And so it's probably worth kind of reminding the audience when this asset produced, what it produced, and then, you know, if it was that kind of 500 or so ounces, where you see the upside towards that 3 or 4 million ounce number. Because that's, you know, from an Abitibi perspective, that's a good, you know, type of resource to get into production with.
Yeah, so the original mine did almost 600,000 ounces at half an ounce average grade. So we think the cutoff was in practice somewhere between 7 and 8 grams. So it was high graded. Our resource that gives us that 1 million ounces right now dates from 2023, lots of drilling for that. But that's also somewhat high graded. It was done at $1,600 gold with a 4.5 gram cutoff. So we're reimagining this mineralizing system using a lower cutoff, probably 3 grams per ton, and then thinking about what that gives us on an ounces per vertical meter basis, and then, okay, if this mesothermal gold system continues down to, let's say, 2 kilometers, and that's typical for the Cadillac-Larder Lake break, and for mesothermal gold systems, we get between 3 and 4 million ounces, closer to the 4 than the 3. So the drilling now is proof of concept of that. We're doing these big gutsy step outs. We drilled the first hole in 70 years since this mine closed. Nobody had ever drilled below the final level, which was at 1 kilometer. We drilled a hole 500 meters below that at 1,500 meters. We're just hoping to see the right geology with no expectations. We went through an ounce of 8 meters, right? An ounce over 8 meters. We've now done 7 wedges off that hole to give a cluster over a 250 meter diameter area. We've published 3 wedges. They all hit. The other 4 have visible gold in the right locations. We put these graphics out in our press releases. So the proof of concept drilling is working, right? So I hope we're not just being overly ambitious with some of these numbers here. We're taking these big step outs of the drill hole. We've done it below the old mine. We're also doing it below the current resource. stepped out 200 meters below the resource there, what we call Train 1, hit there as well, 27 grams over 6 meters and other hits. So, so yeah, this is working, right? And you know, we're going to continue doing this. We raised $12 million in a financing that closed just a few weeks ago. We have about $16 million in the treasury now, no debt, very clean company, and it's all going in the ground, right? It's all these big step outs with wedges, filling out this picture of this system going down to that depth.
Fantastic, fantastic. So again, you kind of think about that 3 to 4 million ounce inventory as your exploration target or informal exploration target. Where do you see the kind of the value creation with O'Brien and Radisson towards that? Is this an asset that, you know, would hypothetically produce 200,000 ounces, or where is kind of the optimal scale and size for this type of asset?
So, you know, putting a mine development hat on, the most important thing is to start with the correct production rate, which is driven by the nature of the ore body. So this is narrow, high-grade quartz sulfide veins, right? So don't be too ambitious on that side. It's going to be 1,000, 1,200 tons per day. We're going to bring that grade down with that lower cutoff, which gives us more ounces, better continuity. So we're probably looking at, you know, upwards of 80,000 ounces a year type production at those mining rates. Thinking sensibly about this, right? And from a development point of view, O'Brien, and many people might know O'Brien, if you drive Highway 117 between Val-d'Or and Rouen, you pass it. It's just off the highway, the town of Cadillac. Because of that infrastructure, it is best developed as ore supply to one of the several mills in the area. So there's two immediately adjacent to the project. There's La Ronde, Nico Ego, of course. That's where the Lapa deposit went between about 2008, 2018. And Lapa is the analog for us. Similar grade, similar metallurgy, in the Piché formation, quartz sulfide veins. And that did about 100,000 ounces a year for about 8 years. So a little bit smaller than what O'Brien is, but similar in character. So that went to the La Ronde mill. West of La Ronde, you've got Doyen Westwood, IM Gold. That's where our focus has been, and we have an MOU with IM Gold to explore the milling of O'Brien ore at that mill. That's an ongoing conversation and discussion under the terms of that MOU. So, you know, Pierre Baudouin likes to sort of stress the point that, you know, that 3 to 4 million ounce target means that this deposit doesn't need to go to somebody else's mill. It does have the attributes at that size of a standalone operation. We think it's best developed going to somebody else's mill. And of course, in the Abitibi, it's headframes and mills on the horizon, right? So there's 5 in the region, 2 immediately adjacent to us, and that's what our development focus has been.
Understood, understood. From a, you know, you spoke to the fact that, you know, 3 or 4 million ounces, you might not necessarily need to see an asset, you know, that material go to a separate mill. It could be developed by itself, given the scale, given the grade, given the proximity to surface. But obviously, you know, if there was a kind of a plan to process or you know, process at La Ronde or process at Westwood, that would make sense. And it's always good to have, you know, 2 folks in the room to keep competitive tension moving with respect to the asset. It's competitive tension 101. Are there any metallurgical preferences for the O'Brien asset as it would relate to being processed at La Ronde or Westwood, or how does that kind of work in terms of material flow sheet from you know, from the mill to, or from the mine to the mill?
Yeah, so under the terms of the milling assessment and the MOU with IM Gold, we published back in February a bunch of flow sheet options. And I'll say right up front that every mining project has a prejudice, right? Everybody likes to be an expert in everybody else's project. So the one on this one, which I heard coming into Radisson was, oh, it's refractory ore, right? You know, you can't process it. So, you know, and that's because in the old mine they used to have a roaster and it sat beside the highway, and as you drove along the highway you saw this rusting roaster for decades sitting there. So I think we bonked that one on the head. We put out a range of flow sheet options from gravity and whole rock leach, very simple, at about 86, 87%. If we do a flotation circuit, regrind a float con, leach that, we're up at 90, 91. And then if we sell a float con, then we get a good payability factor with an off-take agent, we can be up to 93, 94. So we're in that 86, 87 to 93, 94 range, depending on flow sheet options. We know all of those options work at Doyen, right? They're currently doing just a whole rock leach there with Westwood ore, but Doyen has a flotation circuit, right? Doyen, of course, did the Doyen mine and the Muska mine and the Westwood mine. So it's set up with the capacity to do a bunch of different things. Similarly, we see optionality in other mills as well. So that range of flow sheet analysis we did is all out there. It's all transparent, and now the owners of the mills can get a sense of what that ore would look like in their mills, and we see lots of optionality there.
So is the focus over the next 12 months, is it more metallurgical or is it more exploration that investors should be looking for?
I think we talk about the day job and the bigger picture stuff. The day job is the drilling,
yep.
Right? And we've raised all this money, we're going gangbusters on that. It's 4 rigs, it's all deep, and that's going to be most of our news flow, and it's all going well. The bigger picture is this development path. When we did the milling assessment with IM Gold, the MOU begat the milling assessment. The milling assessment begat a mining study. So we do have now a sense of how many ounces this is going to be doing for how long on the existing resource, not counting any of the upside. CapEx, OpEx numbers, value, right? That study, again, contemplates the use of somebody else's mill. So how that study sees the light of day, still to be determined, but it's probably going to see the light of day, and it's pretty good, right? There's a lot of value here if you don't have to build a mill and you don't have to build a tailings facility. You're just building an underground mine, minimal surface facilities, moving the ore to an immediately adjacent mill. Doyen is 21 kilometers away by road. La Ronde is 7 kilometers away by road. So I've lived the life of building mills and building tailings facilities. Wonderful opportunity to not have to do that in this situation. Just focus on the mining, just focus on the delivery of ore to an existing operation. So we know what that's worth to us at this stage, and it's healthy. The ore body is only getting bigger. So the bigger picture story for us is, how does that play out now? Well, what's the next stage for all that stuff?
Mm-hmm. And that kind of hub and spoke model, fill the mill within the Abitibi, has been a tried and true business model for
tried and true. They're all like that, right? Yep. You've got Sigma Lamac, you've got now Malartic as hub and spoke because Morban's coming into that, and Odyssey is there. You've got La Ronde, you've got Bousquet right there, you had Lapa going through there, you've got LZ5, which is the ore body going through what's called the Lapa mill there. You've Doyen, Muska, Westwood going through the Doyen mill. So it's always been that way. These mills have been around in some cases for decades now, and that is the most efficient way to do it. Succession of ore bodies and satellite mines going through that centralized processing facility. And we're just aspiring to be being the next candidate in that pattern.
Mm-hmm. Fantastic. Okay, so we're just coming up on a couple minutes left. Can you do a quick rundown in terms of what the audience should expect from Radisson in terms of drilling and exploration results over the next 6 to 12 months?
Yeah, so a lot of drilling results, all deep, pilot holes, wedges. How I describe our drilling is that there's been 2 recent ways to drill deeper gold deposits in Quebec. There's the Osisko way, where you do a lot of rigs and you get a lot of data, and that's been a very successful model there. And then there's what I call the Richemont way, which was back in the day with the Island gold mine. Richemont began drilling deep on Island with big step outs. And one way gets you a build-up of a resource very quickly with lots of data. The other way gives you directional guidance as to the way it's going with less money spent. We're doing the Richemont way. Both work, right? We've got very efficient drilling costs and very efficient productivity. So we're going to do the Richemont way here. Big step outs, and directionally guide you towards the overall scope of the project. And we think we're heading towards that 3 to 4 million target. So there'll be a lot of that kind of stuff. We're going to hold back on coming out with a new resource estimate until we've done that. We don't want to cut off the drilling and then do that and then have it immediately be out of date, because every drill hole is changing the story for us right now. So we've got, I think, 35,000 meters going on this year with the upsize program. Another 25,000, I think, for next year already funded. So we're gonna do all of that. Put out something at the end of that, which we think is going to be substantial. But in the meantime, again, putting our development hats on, thinking about that path, that's going to be something I hope we're able to talk about with more clarity shortly as well.
Great, great. So you're keeping busy, needless to say.
Yep.
Fantastic. Alrighty. That's all the time we've got. Thank you for getting up here, and thank you for walking us through where the upside is and the asset path ahead.
Thank you.
Thanks, Matt.